Europeans are so granola. There are logical reasons for America's high multiples. It is home to the world's magnificent seven technology titans, including Apple, Amazon, Meta, and Nvidia, making the market overall much more weighted towards growth stocks, shares in firms that are expected to be more profitable tomorrow than today, and so naturally are valued at higher multiples. Europe does have its own group of stock market giants, the so called granola group, which includes GSK, Roche, Nestle, and Louis Vuitton, but they are mostly consumer focused companies. Here they are. Their growth prospects are not as good as those of the tech giants, at least if optimists about AI are to be believed. The same goes for Japan's dominant companies. Since the global financial crisis, investors everywhere have bet heavily on growth stocks, while many old economy sectors, like banks, have faced headwinds, note strategists at Goldman Sachs. This has contributed to America's valuation advantage. Investors are also drawn to American firms because they tend to reinvest more of their profits, increasing expectations of future growth. Last, American stocks are more valuable to investors because people know they can sell them in large quantities without moving the price much, as there are always lots of people who want to trade them at any given moment. The result is that global stock markets have become concentrated on three levels: geographically in America, sectorally in technology stocks, and at the company level in the Magnificent Seven, as well as at the top of European and Japanese industries. Just Apple, Microsoft, and Nvidia together make up an astonishing 12% of the MSCI All Country World Index of Stocks. The dominance is to a degree self reinforcing. The next tech titan is much more likely to be located in America, perhaps having been relocated there, in part because of its capital markets. America's high valuations make it an attractive place for firms to raise capital, and America dominates private markets as well as public ones. Its share of venture capital investments is at around 45%, making it the best place both to raise early cash and in which to go public. Europeans regularly bemoan the loss of their most promising companies to the clutches of Wall Street. One threat for the American market is that investors' confidence in AI related stocks dissipates. But technology firms, though pricey, are not yet valued at the truly eye watering levels seen when the dot com boom of the late 1990s was about to turn into a bust. Then, Cisco Systems, a networking firm, traded at over 125 times its expected earnings. And even excluding technology stocks, America's share of global equities is still 55%, up 20 percentage points since 2008. Even if today's divergence in multiples is justified, it will not in itself maintain America's strong outperformance indefinitely. High valuations predict lower long-term returns, and America's have only even ever been higher in two previous economic cycles. According to Mr. Asnes and his colleagues, international diversification is still worth it, even if it hasn't delivered for US based investors in 30 years. That is especially so if emerging market stocks grow in anything like proportion to their forecast share of global GDP. Today, China's share is so small in comparisons like ours, in part because they only count free float, excluding shares that international investors cannot buy because of legal restrictions. Count everything, which you might if China liberalized those restrictions, and China's share more than trebles to almost 10%. Goldman Sachs researchers predict that emerging markets' share of global market capitalization will rise to 55% by 2075. That does not mean America's equity market is going to lose its status as the world's biggest, however. Since overtaking Britain's in 1902, it has been displaced only once, when Japan briefly occupied the top spot in 1989 1990, before its markets crashed. Today, Japan is still in second spot, but its market is only about a tenth of the size of Uncle Sam's. Goldman predicts that even in 2075, America's market will be almost as big as China's and India's combined. It is a measure of the success of America's stock market that precisely because it has achieved such extraordinary dominance, its global share may be near its peak. You can't beat Wall Street. Free float market capitalization, percentage of world total. Here it is. The red one is the United States. The orange one is Europe's. The light blue one is Japan's, and the blue one is Britain, and the here the little gray one is China. Huh?